Alright, I'm live. And we will wait for people to log in. So we'll give it a few minutes just for people to log in before I start going over our morning pre-market analysis here. We do have news coming out this morning, so we're kind of heavy on the news events. We should see some good movements. We've already seen good movements throughout the night, so I'm trying to see if I can pull this in somehow. Just bear with me here for a minute. All right, so I'll go ahead and start because I know this will be up here and recorded. Making sure we can see everything. Can you guys not? Can someone let me know if you guys see my arrow? It's not showing for some reason. There it is. Okay. I'll be able to speed this up. I'm going to shut this other. I got something else running that's kind of hogging up resources. Okay, so that should be better on the live. So I've shut everything else down. We should be able to stream okay. All right, so you know, in the mornings I like to do pre-market analysis when I come to the computer. I don't think anybody should come to the computer and sit right down. Whatever time frame you're trading doesn't matter. It really does not matter. But I don't think anybody should come sit at the computer and bam, I'm going to get a trade. It's great to be excited. It's great to want to take a trade. You know, you go get you some breakfast and you're fueled up and you're on fire and you're ready to place a trade, but when you get to your desk, your computer, you need to halt. You need to stop for a minute. You do not need to be looking for an entry right away. Something you need to do is look out at the higher time frames and kind of get a fresh look as to what happened, not only throughout the last couple days, but more so what happened last night. So here we're getting ready to start the New York session. You know, I slept through the London session. We need sleep. So I traded some last night during the Asian session and left runners on for them to continue on throughout the night while I sleep. Sometimes they're stopped out. Sometimes I wake up and they're still on. So, but you need to get that fresh look. So in order to do that, you need to dial out to the larger time frames and just get a peek as to what happened overall. Get the general, the big picture. Okay, get the idea and get that big picture of what is happening overall. Freshen your memory of what is truly happening. So on gold, we know it's been in an uptrend. I mean, you could pull in as much chart as you want and know that, yep, it's been moving up and up and up and up and up and up and up. So this is a 4-hour time frame. So if we trade with that trend, it's been trending up, it's been moving up. So if we trade with that on, say you're getting in on an hour, 15 minute, you know, whatever it is, then the odds are in your favor that it's going to go up. It's been going up. However, we know that we get these big retracements. And so we trade those retracements down on a smaller time frame. So overall, the market's bullish on a 4 hour. And you should have a checklist. You know, I've got the checklist of my trade entry, and my checklist goes through, and you look at it was set up when I was trading a 15-minute time frame. So I was looking at the daily, the 4 hour, and the 1 hour, and then entry on a 15. But now it's 4 hour, 1 hour, 15-minute entry on a 3 or 5, as most people are looking to just day trade. Just get in a trade just for the day. I want to get in for the day and make some money. We have to make that daily goal. So however much money you need to make per month, and I'm not going to go into detail. I use 2,000 as an example. Just do the math. If you need to make $2,000 a day, there's 20 trading days a month. You only need $100 a day to meet that goal. So for $4,000 a month, you only need $200 a day. So stop when you get there. So what we do though is we will get in a trade, and then when it goes up, and say you're doing that $100 per day, and say you have on 10 micros, and it goes up and you're up $120, $125, $150, whatever. Close out the contracts that capture that 100. You're done for the day. But move your stop and let the runners run in case it keeps going, okay? And then that's a bonus trade. The runners I count as just bonus. So those are bonuses. And you can always trade with those bonuses if you want an extra trade for the day. That's what those are for. The bonuses, you can not only trade extra trades, you could try news trading or try trading a different session, but only risk, or trade power hour, but only risk what you've on your bonus, okay? So that's all I'm going to go over on that. So getting back to the charts, gold, as we can know, has been an uptrend, but it's been banging up and down here between our zones. So these are 4 hour zones off of high and low swings. This yellow zone is from back here. That is a good price point. Okay, look at this huge swing up, huge swing back. It turned right there. Okay, so that is an area that we expect that gold may have trouble breaking. Okay, that's what you expect by that. Now it didn't have trouble back here. It broke it, 4 hour candle, but it bounced off of our 4 hour downtrend line. Okay, that's what it bounced off of. Now I haven't drawn another. We really don't. I could draw a 4 hour downtrend line from here down to here, but I'm using my zones up there instead. If it goes back down below this yellow zone here again, then I'll probably draw at that point a 4 hour downtrend line from this high to this high. We can't go clear back here and attach it. It's going to go up. So from this high to this high and extend it out is where I draw it if it goes back to break this zone. So right now I'm not even interested in drawing a downtrend line, and then I'm leaving this one on the chart. You better believe I'm going to leave this one on the chart. You know, it was drawn off the high back here to the high right here, and that's right where it turned. It briefly went through on a lower time frame, 3 minute, 5 minute, 10 minute, 15 minute. Yes, we had candle breaks and it went through. But on the 4 hour, the candle still closed above it, and we had a turn there. So what I did was at that point where we made that low, once it climbed back up, then we take that low and we put a zone there. So if it does break, if it would have broke through the yellow zone here, that would have been our target, would be this zone in the back of that 4 hour zone, or the 4 hour trend line. So right now it's banging in between. You guys have heard me say that sometimes they don't get to where they were. Sometimes they don't get to the exact price point. So we have a high over here, and on this run up during the 4 hour candle, it did go over that, but the candle basically closed at about the same price. But then this run right now, it looks like it might be turning before. So as we look at this, these 4 hour candles here, and these are the recent ones, they're bullish. Okay, are we just getting a retracement on that bullish move, or is this a reversal? That's the big question you have to ask yourself. Is this the start of a reversal where it's going to go back to this zone, test this as support, or is it just a retracement? It's going to find some support in here and then move up. So one place I would draw a line is I can kind of see these two candles here, these wicks in here. That's a price level where the mark, gold pulled back to, kind of hit that, pulled back down, tapped it again. And then if you look over here, that's where, gold went down toward our zone, but ended up closing here. So I would look for somewhere in this level, this area. And if I look back even further to the left, I see the same thing. I see that once it broke through this zone, it pulled back and it found support in here at this price level. So that's a price level I want to be aware of. Somewhere in there, because as you can see, these candles close below it. So you could technically draw a zone in there from this candle body to this wick low, and that would encompass those candle bodies. I don't like my mid zones to be super, super thick. I don't like any zone to be thick. But this is what you're supposed to do, is look back and say, okay, what price is valid? I mean, I just pulled it back over to here. So, and we could even pull it back over to here if we want, top of one of these wicks. And that seems like a good price level where the market has respected that, or gold's respected that. It moved up, pulled down, and it held up as support big time. Even during this drop here, that price zone, that area, held up as support. It didn't go all the way back down as far as the candles are concerned. Now on the smaller time frame, again, 3, 5, 10, 15, yes, it pulled down through briefly. But as far as the 4 hour, it held above. And this is what you want to trade with the 4 hour time frame in mind, because this is where the market's made. This is the higher time frame, the daily, the weekly, the 4 hour. And the market makers don't trade off of trend lines, and they go off price. Where's a good price to buy? Where's a good price to sell? And that's where you'll see these things pull to. So right now, again, it's pulling down. That could be a level where gold may freeze up for a moment. It may not break through easily. Okay, I can't say it won't go through that and back to this zone, because that's an unknown. Nobody can tell you exactly that it's going to only go there, turn, and go back up to this zone. There's nobody that can tell you that. Okay, so the best thing you could do is look at the charts, look at what it's telling you by off of the candles, 4 hour candles, and off of the turns, where the market turns or where it turns, back here, over here. Map out those locations. I mean, here was a turn here, and then we map that out. When it pulled up here and pulled down, we marked this as a zone. Well, guess what? It pulled to the zone. It pulled back to this zone. It's pulled back up to that zone. So don't come into trading and just jump on the smaller time frame and get in and be surprised. I don't like surprises in my trading. It needs to be thought out. I have to look and analyze what could happen, and that's how I plan for my day. So right now it's up, bullish, but then we're seeing a pullback. There's the 1 hour. So you can start drawing trend lines on the smaller time frame and look to see if those will hold up. Let me grab it from down here. You can use wicks because this is a 1 hour time frame, and come in and draw that as an uptrend line. And then you can look and see that we actually have, if you draw one across these right here, it's right around where that is. Sorry, I didn't shut my alarm off. But right now it's pulling back to that level. So for me, as I look at this 1 hour chart, and as we're getting this pullback, I still don't know if it's a reverse. It could turn into a reverse. Right now, to me, it looks like it's just pulling down to this support level. This horizontal line we drew. Okay, I mean, look at how that held up as support. Now in here, not so much, just back and forth. You see some candle bodies stopped at it, some didn't. But then you see over here, after this big drop down, it pulled back, and that level held up as resistance. So that's old support holding up as new resistance. Held up as resistance, pulled back down the zone, pulled back up. It held up as resistance, pulled back down, pulled back up. This candle body on the 1 hour even closed below it or at it, you know, even though it moved up. And then once it did finally move up above that price, it stayed right there. It respected this level. So to me, that's a support and resistance level that I definitely want to keep on my chart. So you can label this as a support and resistance level, and then I would just throw 4 hour on there, because that's what we drew it off of. We drew it off of a 4 hour. And the reason why I want to do that is because as I dial down to the 3 minute and 5 minute time frame, I'm going to be trading, and I'm going to be trading multiple pairs or instruments. So typically I look to get into 2, gold and oil. And then after that, once I have runners on, I'll look to get into like ES, NQ, platinum. So that being said, I'm going to be down on a 3 minute time frame taking my entries. If it keeps pulling down and comes up to this line, if I don't have it labeled and I'm on a 3 minute time frame, I will not remember where that line's from. And I don't want to have to go back out to my 4 hour to look. So just label it, you know, support and resistance level 4 hour. So I know it's off a 4 hour time frame. So as it keeps pulling down, if it keeps pulling down to that area, well, then I know that is a stronger support and resistance level because it is off a higher time frame. And yes, it's been broken, and I know that. That's why it's not a zone. Okay? Zones are what I like to mark on turns. A huge turn, you know, pulled up and turned, pulled back down. Pulled up and turned, and then went down to make a lower low. So that's the big picture. You know, it pulled up here, hit, pulled back down, and made a low. And then it pulled right to that price area, that zone, and then pulled right back down to this one and made even a lower low. So that's the big picture. I'm not looking at the individual, you know, here's your moves. I know these are my moves. I know this back and forth is my moves. I'm looking at the big swings because I'm out on a bigger chart. I'm looking at this swing, turn, went back to that zone. This swing, up to the zone, back down to this zone. This swing, up toward the zone. So we're kind of ignoring the smaller time frame movement. We're looking for the bigger picture. So right now, yes, it's pulling down. I could see it hitting in this. To me, it looks like it's going to pull down to this level. It's a strong bearish move right now. It looks like it's going to pull into this level. And then we're going to either look for a bounce in there or a break of this support and resistance level. Now, I would rather it be at a zone. So this isn't in the best place for me right now. I would rather it be up here and turning up here at the upper zone. I would rather it be down here and turning at the lower zone, because then I'm going to look to buy in here as it rolls over. So if it makes lower lows, lower highs, and it was down here, I'd look for it to make a higher high, higher low, and I'd be in long. Up here, as it's making higher highs, higher lows on the way up, if it gets up here and starts rounding over and I see lower lows, lower highs, I'm selling. So yes, I would 100% rather it be up here or down here. However, the hand we're dealt today is it's right here so far. Okay. And let's look at this. This was last night. This was yesterday where it was. Okay. So in the middle of the night, we just had that move up. This is about 1 a.m. in here. So right now it's kind of in the middle. So do you trade this today or do you sit out? Most of us don't like missing out on opportunity, missing out on trades. So to me, if you're new to trading, I would rather see you, if you're going to take it, if it bounces up here or down here, then the odds are in your favor. If it pulls up here to this upper zone and starts turning, the odds are in your favor that it is going to go short off that 4-hour zone. So you can put on your contracts the normal size or a little heavy. But in here in the middle, you might want to go light if you're trading right here in the middle. But what we're going to do is we're looking, it's already pulling down. So again, we don't know if this is a retracement or reversal. Reversal is going to come down here and then break this and then go down. A retracement is just going to pull to this and bounce. So those are the two things you should be thinking. You know, I'm looking for it to pull down here. And it's okay to say, I'm looking for it to pull down here. And then if it starts rolling over, I'm on a smaller time frame, see higher highs, higher lows. At this trend line, at this zone, I'm going to buy. But you need a backup plan. So that's okay to say, I'm long biased on this if it retraces back here. Okay? But your backup plan better be that if it breaks that and pulls down and comes back to test that, that you're going to go short because you don't want to hold a losing trade. So if it comes down here and turns and you get in and it goes through the trend line, that zone, do not hold on to a losing trade. It's okay to cut those short. Okay? That's what you're supposed to do. Don't hold a losing trade. Hold your winners. All right, so that's our 1 hour. We'll go the 15-minute. And again, we're seeing that pullback, that retracement. So on the 15-minute, we could actually draw, I would draw 2 lines on this. I don't like the trend line I'm going to draw because it's very, very steep. I would mark this level. Okay, if we go back out, and we could have done this on the 60. That's a level to be concerned with. Because if it does turn in here and you do get in long, if it happens turn and signal bullish and you get in long, that is the area that you have to be concerned with, that it may not break that level. So when it gets to that price point, just be aware it may not go higher than that. And this should be your thought process every time on these, okay? Just like down here, if it gets to our 4-hour support and resistance zone, it may not break through it. It could, but it may not. So that's down on a 15. So again, we're just looking at it pull back. And guys, if you look now on the 15, look at this 4-hour level we put, support and resistance. I mean, if you look at it now, it just looks so beautiful. I can't, I mean, you know, I'm sorry. This gets me excited because look how beautiful that looks, that line right there. And we drew it off a 4-hour time frame, but we were looking at the candles. We were looking at the 4-hour candles and how it respected that price point. You get down on the 15 and just look at how beautiful this is. I mean, it pulled down and bam, hit it again, pulled to our zone, came up and hit it again, hit it a couple times. Didn't quite get there on this one. That's all right. This one, it broke. Eventually, they're going to break. But look at how many times it stayed below it, finally broke it, and look how many candles, 15-minute candles, because we know on the 4-hour, just keep that in mind. We know, because we looked at the 4-hour, we know that these 15-minute candles right here are nothing more than 4-hour candles that stayed right there, okay, at that price level. So again, looking at the big picture helps you, because we looked at the 4-hour. I know now that I'm down on the 15, I know that those are really 4-hour candles that respected that as a support level, okay? Over here, it held up as resistance. Over here, it's holding up as support. So will it, the big question, will it hold up as support over here? And I can't tell you that. There's nobody that can. Don't let people tell you how to trade. And don't let people tell you that something is going to happen. Everybody uses chart analysis, economic data. See, there we are. It's 8:30. So we've had news that just come out. That's why we had that spike back. And this plays into it right here. That's kind of why I was lingering on gold, is because 8:30 news. So this may break this zone. And we'll kind of watch it play out, but that's kind of why I was lingering, guys. We have news here at 8:30. It just came out. And you see what it did. it pulled right to that support and resistance level. Okay, pulled right back to that high. I don't know how many people were probably down in here shorting this on the way down that didn't get in originally. So this is why you have to be aware of where the news is. This thing could drop clear down here to this lower zone off news. So if you do not want to be, that's why they say don't trade the news. I love trading the news, but I would be on a 1 minute time frame right now to take my trade. And normally you don't want to trade the first 5 minutes. 5 to 15 is what you need to let the news settle down, get this out of the way. And then some people wait an hour after news before they trade. Adjusting stop losses are good, but I can tell you, if you think about the move we're seeing right now and that we had here, I don't know how many traders, how many traders do you think shorted up here? Okay, they shorted somewhere up here. They might have shorted down in the middle of the move, you know, but how many traders shorted in here and had a tight stop loss? They got in after that candle or this candle. But how many traders do you think shorted and they had a tight stop loss? So I go over this with everybody that asks me. Your stop loss should be above if you're shorting, stop loss should be above a swing high. This is your swing high. If you're getting in long, let's say over here you got in long, bounce off this zone, your stop loss should be under a swing low because they're often tested. Even over here, you know, if you took this long and was holding long term, your stop loss should be down here. If you close partial and pull to break even, guess what? You got stopped out on this. So they often retest areas, price points. So, and that's what we just saw right here. This is a little quicker and it happened during news. But that was a perfect test of that area. I mean, it popped right there. And all these people that shorted in here that had tight stop losses, they're out. They took losing trades. Now, guess what they're doing? They were scrambling to get back in, jumping on a moving train because they don't want to miss out. Because a lot of people are taking and trading and doing small targets, small stop loss, and then they see a big move that they missed out on. Well, that's why we use our runners. Okay, so it tested that level. It's down here now, testing the support and resistance zone. So if you're watching the 15-minute, we'd have to see how it does here. But guys, it could pull all the way down here off news. News will totally mess up your chart. So hopefully on ours, it'll stay between, I didn't want that. Hopefully on our chart, it'll stay between the zones. That's where I want to see it stay. I want to see it stay between these two yellow zones right here. That's where I'd love to let it stay and settle after news. So again, I can guarantee, I don't know how many, because there's people all around the world trading. I have no idea how many. But I can guarantee that when it came up here and started moving sideways, okay, and then it popped here, this popped down right here, actually broke this low consolidated area. So I can guarantee there was traders getting in there that got in on that candle break right there. And you have to, and it broke back through, but all it did was retrace. Small retracement. That's why you don't put your stop so close. And if you got in on the entry, stop should have been up here. Now, anyone that, you know, as it moved down, and this is really good that this has happened here while we're live, because this is something you need to think of. There's several ways to manage your stop. Stop management or your trade management is just as important as your risk management and account management. So let's say you got in short there, or you waited, it pulled back, pulled down, and you got in short there. But you took one of those two entries, okay? Then it moved down, and you were able to close partial. Let's say you put on 10 micros, you closed 8. You know news is coming, and you're like, man, if I could just get a trade on. I love doing that. I love getting, and that's where I would have probably been at, is before news. And then you have to decide to yourself, do you leave your stop where it originally was? Are you willing to take, let's say it moved down here and you closed out 8 of 10. You'd have 2 contracts on. Your stop loss is up here where it originally was. Are you the type of trader that can stomach that risk? That if it pulls back on your 2 contracts, you're willing to lose back whatever this amount is. You're willing to lose back from where it is. Actually, you would have got in here. So, are you willing to lose that back, that little bit of a loss, against the gains you've locked in? So that's trader A, trader 1. So trader A will close out partial. Let's go ahead and lock in our daily goal. So he closes out partial, locks in $200, leaves his stop where it was, and says, I'm willing to miss out on that. I could close it all, but on the 2 contracts, I want to let it go in case it keeps running or runs during news. Let's see if I can capture that. If news is bearish and we see a bearish move on it, I'll just get more. That's my runner. So you leave 2 runners on. Trader A leaves his stop here, and trader B pulls his stop to break even, which is here. Now trader A would still be in because it didn't stop him out. Trader B would be stopped out, but with no loss against his gain. Trader C also had his stop out here, but trader B and C, if it would have pulled back a little further, would have been stopped out. So trader A got lucky. I mean, he just got lucky. His stop was out here. He got lucky that during news it didn't spike on up and take him out. That's all it is. I mean, he just left his out here. But that's something to bear in mind. Now, it's easy to look at it now. I mean, you can easily look at it now and go, yep, that'd be me. That'd be me. If I got in there and it moved down, I had 10 on, I'd close out 8. I'd leave my stop where it is. That'd be me. It's easy to say that now, okay? But how do you normally trade? I mean, do you normally pull your stop to break even? And that's what most people do, and that's fine. It's just you're going to miss out on some of this, but it's not always like this. A lot of times it will pop back and pull you out and close you out. So that is something you should never decide in the heat of the moment. You should always know that before your day. So we'll go out and look at the other instruments now, but that's something to bear in mind, that during the, and then we'll peek back at gold. But when you sit down and you go through the higher time frame charts, you should always plan out what you're going to do and how you're going to manage your trade beforehand, or you should have it down on your trade sheet. You need to go out to a 4-hour here on oil. All right, so oil, same thing, guys. It's bounced off of a 4-hour support and resistance zone. So that's the 4-hour. It's drawn off of this swing here where it pulled up. And you can see here it respected it. So when we draw these zones, basically we're looking at where price currently is, which is right here. And we know we need to have a zone below it and a zone above it. And I like one around where price is. So these are old zones. I haven't redrawn these. So this one's a new one that we popped on the way down. So on the way down, we did not mark this zone. Didn't need to. Okay, so on the way down, we didn't. But then on the way back up, when it broke our 4-hour down trend line and then popped up, then at that point, we had to look for support. So at that point where it pulled up here, okay, then we had to look back and say, I need a zone below it. Okay, so as it pulled up here again, it could have very well turned and pulled back. So we need a zone below it. So that's where we came and marked this one. And it just didn't pull back. It just pulled on up and pulled through mid zone and shot up here toward about 50% of that. But then on the way back, we can see that on a 4-hour time frame, it turned right there. So again, that's why you need to look at the higher time frame, because if I was down on a 1 hour, 10, 15, and I'm looking, I would see candles closing below this zone. And I don't want you to think it's broke. It's, hey, I'm looking to short, because I've peaked at the 4-hour time frame and I know better. I know on the 4-hour time frame, it's respected this zone, which is this high, that price level, and then it stayed above it. So that's the importance of peaking out on the 4-hour. So that's my zone below right now. And then this is my old zone. I'm going to leave that. But then we could draw one up here. I don't really need to right now, but that's what you need to be aware of. If it does run up through the yellow zone and back up above it, it may only go here to this area. It may not go clear up here to this one. So it may only go to this area. I haven't drawn a down trend line, but you can draw one. I'm not going to move my old one, but I would completely draw a down trend line here. Because if it does go up through the yellow zone, what's in our way as resistance? What could possibly predict a price level that it could turn at, that oil could turn at? Well, we have this new down trend line. We also have this high, okay? So if I have a zone and a trend line coming into play, like this high here, if you map that over when we were in the downtrend, it pulled right back up toward that area. So you have kind of two reasons why it might turn. One was this high, and the others are downtrend, okay? So the same thing. If it pulls up through the yellow zone, we would have a reason. Let's say it shot straight up. My reason for it possibly turning would be down trend line and then this high over here. So how to draw this zone? We don't really have a big wick on this. I love bigger wicks. Well, we don't have one. So if you look, I definitely want to map out the high. I want to start my box there at the high, but I don't like a real super skinny box like that on a 4-hour. That to me is too small. I like a little bit bigger. I don't want a box like this where I'm encapsulating the whole area. So what I try and do is look at another candle wick, that wick there, or this wick over here. And I like that one. I think that's a good 4-hour zone. It's a little skinnier than most of the other ones we have. But if you look back, that's about the same thickness as this one. Might be a little thinner. And then I'm going to color that red. So now we have a new 4-hour. It's just labeled sell zone under my template. Doesn't mean you're going to sell. If it breaks, we're going to buy. So overall, on the 4-hour, it's bouncing off our 4-hour zone, going bullish. So even though this was a short downtrend, that the 4-hour zones are pretty strong, especially this one. You can see how long it stayed above it. So I would be thinking bullish, look for a bullish turn off the bottom, which we're already kind of in. So there's the 1-hour. And see how the 1-hour candles close below? And this is why I like to wait for candle closes. If I was taking 1-hour entries, I would have never shorted this. I mean, I would have shorted over here, but I would have never shorted this break of a zone. I don't get in on candle, I look for candle closes, but then I look for a retracement back. And on this retracement back, the candle closed at the top of the zone. So at that point, I'm like, okay, it's just playing with the zone, playing with the 4-hour zone. And again, we look at the 4-hour zone and go, no, we're not going to take that yet. So it pulls up. Let's say you missed that. Well, then here on this candle, 1 hour, it just briefly, within the 1 hour, it came to test the bottom, was happy testing the bottom, closed above. Any one of these candles could have been an entry off that bottom, okay? And then here again, big 1 hour candle closed below, wait for it to pull back and test. Well, this 1 hour closed above. So that's your, if you're a 1 hour trader. If you're on a 15, you might have taken losses. No. Where's that other one? So here it did pull back, red candle. So if I was taking it on the 15, I might have actually got in that and then just suffered a loss. Okay. So that's something to keep in mind, but I trade with the 4 hour. So again, I'm not just coming to the computer, jumping on a 15-minute time frame and looking to get in a trade for the day. Because if I was, I would take that. Okay. And how many people would take this one too? It's pretty similar. Pulled down, closed, candle closed below, pull back to test, red candle in. That's your 15-minute entry. Short. However, if you just come to the chart and trade as a 15-minute trader and you never look at the higher time frame, you would have taken that trade and taken a loss. You would have taken this trade and taken a loss because you ignore the higher time frame. But we go back to the 4 hour, we know better. We peek at the 4 hour and look at where the candles close. Okay, so you have to look at the previous 4 hour candle at least. All right. So there's a 5. We already know it's moving off there. I do not have trend lines drawn yet. I'm going to draw one here in a minute. But right now we're seeing, again, 4 hour candle. It closed above. Okay, so closed above the zone. You have to kind of ignore this over here because again, we're looking at the 4 hour time frame. So 4 hour time frame, we saw it swing up and broke these highs over here. And we're going to get our move here. So basically highs over here, pulled up, tested the high, broke the high. Once it broke the high, came back and tested the high. These are your entries in here. Whether it be, I like to see a green candle to get in on. I don't like to enter long on red candle and short on green. So I like to see a green candle. So my entry would have either been that right there, candle, or if I missed that or said, well, that was a nice bullish candle, but I don't want to get in right there. Because I'd rather have a smaller risk, okay, and that maybe that stops too far for you, then you would get in as it pulled back here. If it would have broken run there, I'd have missed it. You'd miss that. So you're either entering there or you're entering back here when it pulled, and maybe one of these candles, and you're along your first target. It has to break this high. It just has to. In order for it to go higher, it has to break that point. It just, that's what it is. Okay? It's not a mystery. So in order for it to go any higher, it has to break this high, which it's doing now. Okay? So this is where you would get in, and if from here to here on one of these, now from here to here, there's not enough to take profit. Okay? That's the other thing you have to say when you look to get in. So let's say when it pulled back, let's say you didn't see any of this to the right. So let's say you were in this pullback, green candle, and you said to yourself, well, I want to get in long. Well, you know the first target it has to break is this one. And if that's not enough to close partial, you have to say to yourself, am I willing to sit through a retracement on the whole thing, or would I rather put a pending order up here? Okay, because you could put a pending order, up above. So again, if there's not enough area in there to target to pull partial, because it has to break that. And you have to think back, how many times have I seen it pull up to a level and not break it and then just go all the way back down? So that's something to keep in mind. So if I took that trade and there's not enough room, I have to say to myself, taking that entry right there, but man, look, there's just not much room in there. I will not be able to close partial trade. So, and it could pull all the way back and stop me out. So saying that to myself, typically what I'm going to do is go in with less contracts. And I'm okay with that. I'm going to go in lighter. So let's say you normally trade with 10 micros. Let's say you only put 2 on. It's great to look to the right now and say, well, I had to put the full 10 on. Okay. But you go in a little lighter. Let's say you put 2 or 4. Because if it comes up and hits this and does not break that and goes down, well, then you're going to take a loss. But guess what? You took a loss on 2 or 4 contracts, not 10. Okay, so you limited your risk on this trade. All right, so this is the thought process you really have to go through on this. Now, coming back here, getting in on this candle, if I looked at the chart and I said, man, it really is respecting this level again, I'm going to get in. This is when I look at the chart and I say, okay, that's my entry. I didn't get in over here. I'm going to get in here. Well, then there's enough room in there to close partial as it gets up there. Well, then you could put on your 10. And you put on 10, it goes up. You close out 8, 6, 4, whatever it may be. Close out partial. You could even move your stop to a break even if you got in here or here. This guy would have been stopped out, moving to break even. So again, that's a factor you have to consider. Do you pull your stop to break even? I don't like pulling my stop to break even. Here's my, I don't know if you want to call it a secret or whatever, but here's part of my strategy. I do not like pulling my stop to break even until a new high and low is formed. That is how it is for me. So let's say I got in there. My stop would have been back here, by the way. I don't put it tight. But let's say you did get in here and your stop is right here. I'm just going to move this down. Just pretend like this is a stop and not a pending order. So let's say you got in right here or right here and you put your stop below. Never put it right to the tick. But let's say you, and it's going to try and move right there. But let's say your stop was at that price. You got in long and it pulled up and you closed partial. You put on 10, closed out 8. You left 2 runners. Now, again, you can look and see that if you got in there and pulled your stop to break even, you'd still be in. But if you got in on this candle and moved your stop to break even, you would have been stopped out. No runners on. And isn't that a shame? Because you'd be up on the 2 runners. So you have to sit and decide for yourself how you want to manage your stop. Your trade management. This is part of your trade management. How do you manage your trades? This should be well thought out before you even take a trade. You should not take a trade and then try and decide in the heat of the moment how you're going to move your stop. It should be thought out. For me, I have to do it off of highs and lows once highs and lows are formed. So I want to see it go up and form a high. Right now we have a new high. It's pulling back and I'm still not moving my stop on my runner because I know it could come back in here to test, say, this level. Guys, it could come all the way back here to test this 4-hour level again and then go up and make a new high. Seen that hundreds of times. Again, it could pull all the way down, test this 4-hour level, and pull all the way up. So it could do that. So if it does do that and my stop's down here, I'm okay. If it does pull through that 4-hour support resistance level, or this support resistance level, that's not 4 hours, sorry, it's off here. But if it does pull through that level and stops me out, I'm okay because it's probably going to go down to here. So I like to leave my stops back below swing, the shorter time frame, swing lows and swing highs. So for me, it's pushed and made a higher high. If it comes down in here somewhere, I don't care where, comes in here, comes in here, comes in here. I'd like to see it make a higher low than this one, but however, it may turn in here, making just a higher low than this one. I don't really care. My stop would stay there. It comes down, swings, and it makes another push. I need to see another push past this high, and then that's when I'd consider moving my stop. So right now we had a small pullback and we're on a 5. So as far as a trend line, I'd look to draw here. come back here, go to this swing low, and that's going to be my trade line. And the only reason I call them trade line, guys, is because I need to delete them at the end of the time frame. I make them, they're dotted, make them dotted or dashed. Basically, that just is that's a trend line that I'm drawing that just supports my trade. It's nothing long term. That's all it is. It's just supporting my trade idea and the trade I'm in. So drawing that, I could see it pulling back into this area. Wouldn't hurt me, wouldn't surprise me. Wouldn't surprise me if it pulled back and turned in here and then shot up past that level. Okay, now what would surprise me a little is if it breaks that and pulls down. However, it's not going to totally floor me if it pulls back down to this level and go up and then test the back side of that. So that would be how I would have entered on that. It's already kind of gone without us, but not before market open. I mean, these candles in here, this one's 830. This candle here is the 830 candle that, you know, during that news wick we saw on gold. That's all it did to oil, was just push it up. So we could have still got in there on this right here where it pulled back and hit that trend line, but I didn't have my trend line drawn, so we didn't. And again, the first break was here. Going back to this entry where here you got, let's say you got in and you did not full lot it. Okay, you're type of trader, if you get 100% setup, good A plus setup, 100%, you're going to put on 10 contracts. So let's say here you said, man, I'm not going to be able to pull profit or pull partial out because that high is so close. What if it doesn't break that high? Then there's two things. You either get in there light or you wait for a pullback. You had a pullback, you got in full contract, or you got in light here. There is nothing wrong with when you get in light here, when it comes back and you add contracts here. Now keep in mind with the funded accounts, most of them you're only allowed to do that once because you'd be in the negative on these two contracts. Let's say you put 2 out of the 10 on and it pulled back and you said, wow, that's my entry. It's bouncing off this high over here, these highs bouncing off that level, got a green candle, I want to get in. And you might have even drawn a retracement line. So if you drew a retracement line on down from that top to that top and extended that out, that would be my retracement line. And I don't like to extend those. So that would be my retracement line down. So you're either getting in there on the bounce of support or you're waiting for it to break a retracement line, in which case you're right back to where you were to enter, or you wait and add here. So there was multiple areas to add in. Just keep in mind that if your trade is in the negative, if you put 2 on here and you waited in here, saw that pull back as support and said, I'm going to add 4 here, 2 here, 6 here, 8 here. You can only do that once on a funded account. They will not, just don't add multiple times in a negative. It is not allowed. They'll let you do it once per trade. Okay, so I know I'm getting into more trade stuff than market analysis this morning. The other is you put on 2 here, or you went in light here, even 2, 4, is adding to your trade as it moves in your direction. Now this is scaling in. I love scaling in because it allows you to let the market pay your fees. Okay, so let's say you only put 2 on here or 2 on here and it's pulling up right now. So let's say you just now stacked on 1 more. So here's what I like to do, and I need to we'll show you this here. Let me delete this. All right, so we're getting in here. I don't care, let's get in back here. Okay, that's where we got in. And then our stop is back here. Can I not edit that? I should be able to. All right, so that's our stop. Okay, our original entry, we got in up here, stop was back here. It pulled even deeper, didn't stop us out. Why? Because we did not put a stop here under the candle. That's a big no-no. Never use a bottom of a candle as a stop. Give it room to breathe. Like I said, I'd have been under this one a little bit. So my stop would have been down here. It's a little bigger stop, but I have to go with the market moves. I have to look at the highs and lows and say, okay, it could pull back to test there. Okay, so that would have been where my stop was. Now, when it breaks that high, when it broke this high here and moved up, then at that point, I could have moved my stop under here. Okay, and it's going to attach to the candle, guys. I got my little magnet thing turned on. So just ignore that it attached. I'd put it about down in here below. It's just the magnet tool's on, so it's going to attach. I guess I could turn that off. Oh, no, just turn it off. There we go. All right, so there we go. So it would have been down in there somewhere. So you would have moved it. Well, now, and we've had that push, and now it's coming to test it. So that would have been an area as it comes down to test now this level is on a pullback and then a green candle, you can add a contract. It will move this one. So that's something to keep in mind. But as they move, what I like to do is once I move, because I wouldn't have added to this yet, because the market can't pay and cover me. I'm not covered. I'm not covered yet because my stop's down here. Okay. Now, once my stop gets moved above my entry price, which this is super aggressive right now. I wouldn't move it there now. Mine would still be here. But someone that's real aggressive might have put on the 2 there, might have closed out 1 up here. And then it came down and they moved their stop to break even. Well, then if this wicks down a little more, or comes down a little more, they're going to be taken out. What I like to do is right here, let's say this is where you end up. So it goes on up even further and you're in the good and you move your stop to break even. I only like to add to my position because your order's going to move. And I'll just show you. I don't know if it's going to happen or not. But I only like to add to my position because if you add to your position, let's say I'm just kind of predicting. Let's say we got that push up and you want to add another contract or 2 on. Your order will move. So when your order moves, you have to say to yourself, am I willing to take on this risk when I add those 2? Or has it moved far enough I can do this and move the stop better and break even? Now I'm covered on everything. So you had 2 on here, you add 2 more after it pushes. I would never add 2 on this little move up. You have to wait till it pushes further up. And that's what I like to do. I like to add to my position. I know the order is going to move, so I like to add to my position where I can also move the stop when the order moves to better than break even on the stop. And then I'm still in a no risk trade, but extra contracts on before it moves. Okay. So that's how you got to kind of do that. So let's go to platinum real quick. We're going to look back on gold here in a little bit. So platinum, we were in this zone kind of bouncing between both these yellow ones. And then that was the big trade. That was the one I did the other day. So that was our big trade short. We kept shorting off of this zone as it tapped to it. And then finally it just went. And then I was out. So I just pulled my trade off. But I got in up here. I was out at the bottom of this zone. I closed. I had to get back in here. And I caught part of this move. So for me, I would dial it down on a smaller time frame. I never knew it was going to move that far, or I would have held. But as it pulled down, it hit the bottom here and went sideways for a while and even made a higher high, higher low, smaller time frame. I got out. And then when it pulled below that zone, I had to get back in. Okay. So right now, guess what? It's pulled back and testing that on these 4-hour candles. So if it does start moving short, well, then you're in it. And then guess what? We're going to trade it down here. Now this just is a line right now. So I'd want to come in and draw a box. You can go from this wick to this wick. There's really no right or wrong way, but I like to go to a candle body. So for me, I went all the way from this low wick here up to these candle bodies, up to where that red candle is right there, the body of it. That's going to be my green zone, since it's below. And we just label it buy sell zones. And again, it doesn't necessarily mean I'm going to buy right there, because I have to look for that bullish confirmation that it's going to turn. Trying to turn this one into a red. So those are my 3 zones right now. We don't really have to do a lot of changes on the 4-hour time frame. Sometimes just recolor our zones. So right now it's pulling down toward that. So right now I'd be thinking still bearish. I was bearish. We were bearish under this red zone. So when it pulled back under the red zone, we were bearish every time it went up and hit the bottom of that. So we were looking for lower lows, lower highs on a smaller time frame to form and getting in short. Well, sometimes that short just failed. I mean, it was successful. We were able to close partial. It just pulled back. Wasn't ready to run. Well, it was ready to run the other day. Okay, so now we're back up there. So we're still thinking bearish on it because our 4-hour chart is, we're in a bearish move. So I want to trade with that trend. This to me is a pullback of this bearish move. Okay, so right now I'm looking, can I short? Well, I already know by seeing this red candle, we're already getting some lower lows, lower highs on a smaller time frame. So we go down to 60-minute. There it is. It pulled up, turned right at the zone, and there we're in our start of our new bearish drop off the zone. So 15-minute, and it is making lower lows and lower highs in here. Okay, lots of wicks, but lower lows, lower highs overall. Let's see something. What did I lose there? Something, right? Something's not tracking. Oh. I don't know if it's that magnet. There it is. It wasn't looking right because of the magnet was turned on. So here's your push. And again, we can still see that. So the 15-minute, we already knew it was making lower lows, lower highs. So the 5-minute, you just get more noise in there. So you have to decide what you're going to use for looking for your entries. Do you look at the 15-minute and get in on the 15, or do you look at the 15-minute and get in on a 5 or 3? I'm 4 hours, 60, 15-minute and get in on a 3 or 5. Okay, so it's kind of already moving without you. So you have to decide if you're going to wait and see if it pulls back up here, makes another run, and then get in short. Do you get in short right now, putting your stop above this high? I wouldn't put it right around this one. I'd put it back over this one. Or do you wait for it to wait for more bearish confirmation and wait and see if it breaks the lows in here? So if it breaks the lows in there, okay, so you'll see over here it broke, tested this area, shot up. Right now that's where it's at. So just bear in mind that if I got in right now, that would be a level of concern for me, that it has to break that level before going on. And I could pull back to this little high here, and you can see, you know, same thing. High back here, pulled up, hit it, over, hit it. That's where we're hitting right now. So that would be my area of concern, would be that it has to break that before it goes short, because if it doesn't, it could pull all the way back up here. So for me, I'm not getting in until it breaks that level. I would like to see it break that, and then break that and test it before moving on. That would be my entry right there. Pull back, green or red candle in here, and then I'm going to get in and short. So that would be my move on that. And if it does not, if it comes down here, it could come down and actually test this level. This level could hold up again. It could come in and make a lower high still, which would be great. It'd be ideal if it makes a lower high here and then goes down, makes another run and breaks it. However, it could come back up and even make a lower high, higher low. It could go back up to test that level. So you just can't be surprised if this is what happens here. Okay, in order for it to get to that lower zone, I'd love to see platinum come down here, break, test, I'm in, short to the zone. However, I'm not going to let it surprise me if it pulls down to this level, bounces back to even form a lower high, and then it could break. You know, it could come back lower high and break, but it could also pull all the way back up here for another test of this price level. Okay, for 4 hours in. So again, you just can't be surprised on that. ES really made a huge run up from last night. So overall though, let's go out to the 4 hour time frame. So we have our zone off of this swing high up here, nice swing high. That's where our green zone is. We also have a mid zone or yellow zone. It's been respecting that and staying under it. So we've been actually over here, we traded it short. When it pulled up here, it was short, 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 short. Every time it hit the top of it, near that zone, it was short, short, short. I actually drew a support and resistance level here off the 4 hour time frame. This level was drawn, I believe Monday, I think, off of this high here. No, Tuesday. So that was done. That was done on Tuesday. It was drawn off of this. So I didn't do that then in the live, but that was our Tuesday 10 a.m. candle. It pulled up, and then when it pulled down off that, then I put a support resistance level in there. So support and resistance level off the 4 hour time frame. It pulled back to test it, held up, and then shot down through our 4 hour zone. Okay. But overall, look at what else it hit. So it hit here. This dashed line is a 4 hour trend line. I don't know if I can zoom all the way back. There it is. So it is an old 4 hour trend line that's drawn from here to this point. And then I think I had to move it out a little because one of these swings kind of pushed it out. I think it was here. So I left it on my chart. I don't always delete them because the 4 hour levels are strong. So this was an old 4 hour trend line. And then when ES dropped here and turned, well then I drew another line, trend line from here to here and made it a dash because at that point it's not my outer trend line. My outer trend line's here. So what that reminds me of is when I'm down on a smaller time frame trading, when I see the thick dashed line come up, when I see that thick dashed line come up, I know it's an old up trend line. If it was red, it'd be an old down trend line. So I know it's an old up trend line. I know this one's an old up trend line if it gets back down there, because I know those aren't my outer ones. My outer trend line is solid. So as I'm down day trading, I know what's going on. I know where we're at in regards to the higher time frame. Okay. So what that helps me with is right now, as you're trading, that if you're on a smaller time frame, you know that, and it's pushing down. If you were in a trade here short, as it's pushing down, you see this dash thicker line come up. Well, you say, oh, we're at an old 4 hour uptrend line. So don't be surprised if it turns. And that's just what it did. Turned and went up. So right now it's above this zone. It's bullish. It's heading to the other zone, which is up here, and it may stop short. Where may it stop short? It may stop short here at these old highs. Now it may not get to those highs. I've mentioned this once in a while. This is, I mean, I hate throwing a lot of stuff on you guys because it does it could get overwhelming, but there's what's called inside tops and inside bottoms. Basically, all it is the inside or the underside of a swing. So this push up here, okay, that bottom of that candle would be for me an inside top, meaning that when it pulls up, it may not go to this high. It may turn at the bottom of that, and I would rather see it turn at the bottom of that. The reason why, that means it's made a lower low. If it comes up and turns at that line, which is the bottom of this level, turns and starts heading short, that is a lower high than this one. And that's why you guys will see that. When you look at swings and highs and lows, if it comes up and forms a lower high, what do we want it to do next? We want it to go down and form a lower low. Okay? That's what we'd like to see, lower low. If it makes a lower high, we want to see a lower low. Bearish confirmation. These are big swings though, but just don't be surprised if it turns there. That's the thing. And when you get a lower high, so when you look at highs and lows, what you normally get is you'll get a lower high, and then you expect to get that push to make a lower low. It doesn't always happen. So then I'm not looking so much for it to swing at an inside bottom. We're looking for it to push past because it already swung at this inside top. It made a lower high. So you're looking for a lower low for further bearish confirmation. Okay. But overall, that's a 4 hour. We're down on, we're not trading there. But that's just how those look. So again, mark them on your chart 4 hour. And if you have to, you know, put text on the, I love putting text on these. So for me, this would be just IT for inside top, and then 4 hour. And that's it. That's how I'm going to label that one. So that if it turns there, I know. I'm always, if I draw them on the 4 hour, I want to put 4 hour in the name when I tag those lines. Okay. So right now, 60 minute, everything we see is going to be bullish on it. Okay. So there's our bullish move so far. Trend line on this, or trade line, would actually be from here. It would already be drawn. So I mean, it's already in it. If I can find it. So that would be my trade line, and it's from down here to here. And guys, you don't have to call them trade lines if you don't want. You can call them trend lines. I normally just only throw the labels on just so when I post pictures, people can see what that is to me and what I'm thinking. They know I'm thinking, well, that's my trade line, and that's what I'm expecting to hold up as I look to trade. So I'm not in this. I'm not in anything right now as we're sitting here. We're getting ready to, what do we got, about 12 minutes for the stock market? Got about 12 minutes for U.S. stock market, and then I'll be looking to get in something. So as of right now, and I like to get in stuff early. So normally between 8 and 9 o'clock, I'd love to be in 1 or 2 instruments, and then love to be in 3 or 4 by 10, 10:30. I don't like taking stuff after 11, but I will sometimes if it's 100% set up. So right now, ES has broken its highs. I don't need to draw a line here because we already have one there. And then this would be the price level it's breaking right now. So if it breaks through that, and we're on a 15-minute right now, so I'd want to dial down to a smaller time frame. Make sure my line is anchored to candles on the smaller time frame. So right now we'd be looking to still get in this bullish until it breaks this trade line. So it's up above a 4 hour zone. So we're expecting that it may move all the way up to the next 4 hour zone. Okay. So I'm thinking bullish and going to stay bullish in this. So I'm going to look for an entry to go long. I'm not going to look to go short. Right now, it's trending or pulling up bullish. It's a bullish signal. So the odds are in my favor to take it long. Bam, there's 50% reason to take the trade because the odds are in my favor because I'm trading with what is currently going on. trading with the trend, trading with the market, it's bullish. So I'm going to trade in that direction. So I only want to get in longs. I'm going to be more successful. My trade should be more successful if I get into longs, not shorts. If I get into shorts, I'm trying to pick the top. Okay? Even if it pulls way up here and goes straight up here right now and starts pulling down, if I get in short, I can trade it, but I better trade it as a retracement that it may only come here and bounce. And if that is not enough room for me to close partial and make profit, I don't take it. So trading retracements is riskier. So if you do that, trade the pullbacks, less contracts. Riskier trade, less contracts. Okay? Because overall, we should be thinking bullish on this. So we could have got in. Let's mark, where is that's 7. I think this is the 8. It should be the 8:30 candle. So that's the 8:30 candle. Popped up, popped back. I want to go down to a 5. I need to make sure that my trade line's anchored. It looks like it's anchored. So it's anchored from here to here. Now I'm going to go ahead and move it. I am going to attach it to that wick right now. You don't have to, but I am on a 5-minute, so I move the whole thing. So I don't like to on a 5-minute. I like to include the wicks. The only time I don't is a 1-minute. I'll ignore wicks a lot, and then now I'm going to have to draw a new one because I don't know where the other point went. It just disappeared. So we'll pull us a new one here. All right. So down on a 5, down on a 3. Again, we're looking for that entry. So what you have to monitor is the bounces. So overall, again, we're bullish. We're going to look for bullish bounces on this. And right now, it is basically trying to break this high. And you'll see how you got to move the lines around when you get on a smaller time frame. So right now, we're looking for it to break and stay above that level. It kind of broke here, one candle break, and closed above. But on the pullback, it pulled below and just went right back to that trade line, from where it's been bouncing. It's been bouncing off that level. So it started back here. A point to draw it from was here, and then it tapped it. It doesn't always pull all the way back. This one pulled all the way back, pulled up, it pulled all the way back here. So that's what you look for it to do. You look for it to bounce off of that trade line for your entry. So we're only looking for long entries on this. We're not looking to short it. So the only time we would short this is if it breaks this trade line, breaks it, and then pulls back to test the back side of it. So like right now, if it sat there and pulled back to test it and broke through it, and it might turn right here because that's where these lows are. Okay? It might even go here and turn there and go back. But if it does break this trade line, and then it's going to pull back, typically, unless it just breaks and runs. And sometimes they'll break and run. That's where a pending order comes into play. And the pending order is a backup order. Go in lightly because it's a riskier entry, and and then you won't miss the whole move. You'll have a light pending order on. But meanwhile, if it pulls down and then pulls back to test this as support and resistance, it could track the back side of this, more of a channel shift. So it could track up that to test this high and then go down. So that's what you have to kind of think to yourself. What could happen? So right now I'm looking, and if it pulls back to this trade line, gives me a green candle, I'll get in long, just knowing that it may not break this price level. You just have to be prepared for that. And in the meantime, if it pops through, we got 5 minutes before the U.S. stock market opens. In the meanwhile, if it does pop through, that's what we'd be looking for to trade. All right, so just be thinking on ES right now, still long as of now, till that's broken. So see, there's our gold. So it did break through, obviously, during that news candle. We knew it broke through. It went right to our 4-hour zone, and that was about 8:45. So really within 15 minutes, it pulled down to test that level, and then it's pulled back up to test the backside of our green up trend line, as well as the support resistance level. So I'd still be thinking short with the off the news on this, but we have to really see how this plays out because we're right at that 4-hour support and resistance level. So anyways, trade safe today, guys. Just keep in mind of what happened here with the news, and you either need to you have to decide if you were in on that pre-news. Do you pull your stop to break even to minimize your risk? Do you leave your stop out and say, okay, I'm okay with losing that amount on my runners? Or do you get out of your trade altogether and just get out and then wait for news to settle and get back in? All right, have a good day.